All right. Good morning, everybody. Happy Monday. Good morning, Daniel. Always the first one in. The good morning right at the open. Carl, good to see you. Nice to have you guys this morning. Guys, my name's Mark Novak. I'm going to be walking you through the education today. Hey, Bobby T, good to see you. Guys, hope everybody had an amazing weekend. Hope you rested up. Hope you did some study. I did a couple days worth of market replay this weekend. Just practice, right? Never too good for the practice. So got in, did a lot of repetitions, took about 100 pictures, kept going through an awful lot of patterns, looking for little nuances, little things to make me a better trader. Hey, good morning, Gary. And then when I was done market replaying, taking my pictures, annotating my charts, guys, I took those charts and I posted them, much to John Novak's chagrin, directly to him via Skype, and we had a conversation yesterday morning about quite a few pictures and quite a few scenarios and an awful lot about just the patterns that we see in trigger line position. So guys, I'm saying that to let you know that the things that we ask you to do here in class, post your pictures, ask for help, seek advice from somebody that's been doing this, somebody that looks at this every day. You're never in a position where you don't need that. So that's what this classroom is. It's going to be a discussion. It's going to be conversations between the two of us. I'm going to ask for feedback in the form of pictures from the trades that you take, maybe comments in the classroom. And together, we're going to work together and get you exactly where you want to be. Man, I don't know if that was a spanking, Gary, but they did win, didn't they? I think everybody expected that. Haven't really posted anything yet. No. We're just starting off, getting going. John's been busy in the room this morning. There's already been some amazing high probability trend trades happening today. So we're going to go back and take a look at those. But before we do that, we're going to go through the routine. I'm going to let a few more people file into the room. Guys, I know that we have new people in here. Each and every morning we get people on demo. We get people that are a couple weeks in, people that are really looking for that consistency, trying to understand how to read the indicators. This classroom, the first hour or the first 30 to 45 minutes will be dedicated to you. But before we do anything, I always come to forexfactory.com. This is where I'm going to get my news, guys. This is where I'm going to see if there's anything happening in the world, any news releases that may make the market jump or change direction or really just behave erratically. And when I look at the news, I'm not so much worried about what the news is. What I am concerned about is just knowing when the news is going to be released. And there's three that I look for. The most important one, the one that tends to have the highest impact, is the high impact news, this red box. And this red box lets me know that whatever they say about the advanced GDP, there's a pretty good chance the market is going to go absolutely nuts for a couple minutes. Next, there is the medium impact news. Lets me know that the market has a pretty strong potential to go nuts for a few minutes. It's a good time for me to refill my coffee, go toast a bagel, eat a waffle, whatever. And then I like to make sure that I'm aware when these low impacts are coming out. They can be market movers. If there's somebody with awfully deep pockets waiting for the CB leading index and the news doesn't say what they wanted it to, they may dump a lot of money, they may take a lot of profits, and once again the market may move a little bit erratically. So guys, take a look every morning. Check your day, check your time, put a note on a piece of paper, have Siri give you a reminder. But make sure that you are checking that news and putting yourself where you're not going to be in front of something kind of crazy. And then once I'm done with news, charts are loading, going in. We're ready to get the day going, guys. And everything that I talk about in this room comes from the education page, comes from the tutorial section. The tutorial section is going to be your rules. It's going to be your glossary of common terms. It's going to talk about anything and everything that we're talking about. So for the first couple minutes of class here, I'm going to focus heavily on what we call a high probability trend trade. And this high probability trade means that every indicator on every chart is lined up. It agrees. There are very distinct advantages that are given for the high probability trend trade. And this is going to be really what we focus on for the first 20 or 30 minutes. I'm going to cover the rules. I'm going to show you visually what this trade looks like. We're going to go back, find some examples of it. But for those of you that are kind of adrenaline junkies, you guys want to be busy. Everything that we do with the high probability trade is going to take us to that second trade, that medium probability trade. And this is when most of your indicators line up for a trade. There may be one little challenge in there. You're going to manage these a bit more aggressively, protecting your profits, getting out at trouble spots. But these are going to be the two focuses. But for your first 30 days, keep yourself focused on that one simple trade, that high probability trend trade. As this is a trade that's been proven through back testing. We have an awful lot of traders that are trading it live. When you follow the rules for the high probability trend trade, this is a trade that typically wins 70 to 80% of the time. It gives you that memory of success. It creates that confidence. But the most important thing that it does is it's going to teach you to read your indicators, to be a chart reader. And chart reading, honestly, is 90% of what we do, guys. Waiting for the advantages to be present, giving ourselves the best of the best shot at a trade that's been proven to win more than it loses. So 90% of what we do is going to be chart reading. 10% of what we do is going to be taking those advantages and then pulling the trigger on that high probability trend trade. If you really allow yourself to be a student, if you allow yourself to keep it simple, these chart reading skills are going to have you doing three things. There's three essential elements. You're going to be able to understand where the market is likely to continue, and then you'll be able to use that continuation point for an entry for a high probability trend trade. You'll be able to understand where the market is likely to go, and you'll be able to use that area where the market is likely to go for profit targets, and then you'll be able to understand where the market is likely to stop. And when you identify where the market is likely to stop, not only does it keep you from trading into areas that may reverse the market, but it also establishes a great foundation to set you up for a high probability trend trade. So we're going to look at three rules, and I'm going to respectfully ask that you allow it to be simple. Keep it on two charts. Three rules on two charts. We're going to go through the charts and what they're used for first. Then we're going to talk about the rules. Then we're going to look at them visually. And then, guys, we're going to spend a lot of time in that live market today, reading our indicators together, seeing what they're telling us. So when I'm looking at two charts, the first chart that I look at is the 13.2. And I'm going to use the most current bar to determine the trend of the market. If the background is green on my 13.2, I'm only looking for rules to be met for high probability trend trades long because we're in an uptrend. If the background on my 13.2 is red, only looking for rules to be met for high probability trend trades short because we're in a downtrend. So the first advantage that you're going to provide yourself is the advantage of trading with the trend. Next, we're going to look for momentum, and this is rule number one, making sure that we have strong triggers. Remember, only three rules for a high probability trend trade. And then we're also going to look for rule number two, no termination conditions, understanding that we're not trading into an area likely to stop the market. And this chart is really a broad stroke of a brush. It's taking the general, excuse me, one second. Sorry about that, guys. Apparently, there's allergies in California. We're going to take this broad stroke of a brush. We're going to get that overall feeling of the market. And then when these first two rules are met, when we have that strength, when there's nothing in the way, that's when you're going to turn your attention to your 5-1 chart, your smaller, faster chart. This is going to be the chart that you use for entries, and you're going to refine that broad stroke of a brush. You're going to take that one bar and break it down into many bars. You're going to be able to pinpoint your area of entry, that point where the market is likely to continue. And that's rule number 3, pinpointing your entry. And this is going to allow you to reduce risk. It's going to allow you to maximize your profit potential. But once again, 3 rules, and it's just going to be 2 charts, guys. And I'm a big fan of simplicity. I'm going to do my best to keep it as easy as possible, especially for my new users. These 3 rules that we cover. Rule number 1 says that we have to have strong triggers. Rule number 2 says that there should be nothing in the way, no termination conditions. And then rule number 3 says that we're going to enter that market by using a limit order to buy or sell a pullback at an area inside of favorable large triggers. This is the most simple version of the rules that I know how to come up with. And I want you to think about rules in 2 ways. The first one is the provided advantage. When these rules are met, going into the trade, I have the advantage of momentum, I have the advantage of a clear path, and I have the advantage of an area, an entry where the market is likely to continue. The flip side of that is if I choose to break my rules, then what advantage am I giving away? I'm giving away maybe the advantage of momentum. Maybe I'm not providing myself a clear path. And I'm looking at the entry where the market is likely to continue. I'm giving away that advantage if I choose not to follow the rules. No sound. Guys, give me a Y if you can hear me. Bobby's got me. Jonathan's got me. Claire, appreciating. Good to see you. Ron. Good. Okay, so you guys can hear me. Gary, you can't see me. And once again, you may need to click on mine. The YouTube live is going, but we haven't reached capacity in class. Good morning, Safia. So you should be able to see me. If, guys, you ever walk in and there's more than 50 people in this classroom, well, it doesn't look like my live broadcast is going. Nope, it is. There we go. So we are recording live on YouTube as well if you go to the live stream. Ron, you probably don't want to see me. It's early. Good morning, 10K. Good to see you, man. So Gary, maybe try reloading the room, see if that helps out. It looks like YouTube is streaming just fine. It looks like you guys are able to see the trend trade rules here. You're in now? Fantastic. And guys, remember that there is a link. You can go to the YouTube page for Nexgen. It's not showing me live here for some reason, but we are streaming live. I'll give you that link. I had to jump in and do a quick little setup on that OBS system, but I think we're good now. All right, where was I? 3 rules, right? 3 rules, providing 3 advantages, looking for them on 2 charts. Let's go ahead and break down, guys. What's it going to look like when we're looking for that high probability trend trade? Well, pretty simple. I'm going back and forth between monitors. Remember, rule number 1 says strong triggers. Strong triggers will be the easiest thing that you're ever going to recognize as you begin to learn the indicators. If the background is green and we're in an uptrend, the small triggers will be located above the large triggers. The large triggers will be widening, they'll be angled in the direction of the trend. And guys, it's this space created between the small and the large that lets me know that the odds are favorable for the market to continue up. In a downtrend, small trigger lines break below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Once again, it's this space created that lets me know that the odds are favorable for the market to continue up. And guys, waiting for that advantage of momentum gives us, keeps us in a market most likely to move in the direction of the trend. When those small triggers work their way back to the large, when they begin to lose momentum, anything can happen up or down. So rule number one gives us the advantage of momentum. It's a pretty simple look. I'm going to put the look right here in the room for you. But this is what we're going to be looking for all day long, looking to lead the way. And this is something that happens quite a bit. We had a beautiful look. I'm just going to show you only on the 13.2, and this is after the fact. Your absolute best look, this is the S&P this morning, and then you can see where it begins to lose momentum. During this run, we had a picture-perfect high probability trend trade. When I see these tails or these wicks on my 13.2, I like to circle the bottom of them if I have odds favorable. This was a potential entry on the 5-1 chart. Whoops. Once again, if we look at it live, smalls are below the large are wide. They're angled in the direction of the trend. Things are working out. Oh my gosh, Paul, it was the best look. I was just opening my charts and they were calculating. I wasn't able to take that trade. My brother caught it for me though. It was nice. This rule number 2 says no termination conditions. Make sure that we have a clear path. Termination condition is just an area that may reverse the market. In this reversal, we can identify it when price reaches an area. These areas can be support, resistance, one-to-ones, divergence lows or highs, large chart midband if the large triggers are a full bar away. All of these are areas, lines on your chart, that'll help us identify a termination condition. We also have any third divergence in the same area. This one becomes important because we can see it on a smaller, faster chart, and we can also use it to manage one of those medium probability trades as we get into those. But let's go through the recipe for a termination first. Identifying a termination is a simple process. It's identifying first that price has reached an area, meaning price has come down to this area of support. And when it does, your job is to ask yourself, where are the T3 trigger lines? Well, if they all remain above that area of support, this is an area likely to stop the market. This is what we call a termination condition, and it means that rule number 2 has not been met for a high probability trend trade. And then your job as a rules-based trader is to simply say to yourself, well, I don't have a trade. I have to wait for that area to break. When an area breaks, this is your look. Both the smalls and the large trigger lines will get to the other side of support or resistance. When both break through with that odds favorable momentum, then it's time to look for that high probability trend trade again. So simple process. Price reaches an area. When price reaches an area where the trigger lines, you can see that the trigger lines remain above these one-to-ones. Guys, this is a termination condition. Rule number 2 not met. There is no trade for the high probability trend trader. And it works out perfectly because this market bounces and it ultimately reverses, provides us odds favorable momentum, and then there's another one of those tails, another one of those wicks, a potential high probability trend trade entry to be had on the 5-1. So do me a favor, guys. I've got 43 of you in here. Give me a big old capital Y, a thumbs up, a yes, sir. Actually, don't say sir. That makes me uncomfortable. A yep. Let me know that you're with me on this. Price reaches an area. If the trigger lines don't make it through, guys, the yippers, I like that one, Johan. The area is likely to stop the market. We've given away the advantage of a clear path. We're not looking for that trend trade. Cool. So let's look at the 3 divergences in the same location. And I'm going to do it. I'm going to take a picture of this look right here. And in this look right here, we have a pivot that seems to come from nowhere. It hasn't reached a key area, but it has exceeded a key area. The same thing up top. This is going to happen on your 13 too, and because it's a slower chart, it's going to be difficult to see this change in the moment. So our next termination condition is going to allow you to identify that change. 3 divergences in the same price range may terminate the trend. This is powerful when the small triggers are inside of the large at the time of that third divergence. So what we've done is we've identified losses of momentum through divergence when this cyan line prints, when this magenta line prints. We know that the market is losing steam. We can also identify it because our trigger lines go from odds favorable to anything can happen. And then finally, if that third divergence is higher than the previous pivot or lower than the previous pivot, this is one of those head and shoulders patterns, and it actually becomes even more powerful. So you can take this 3 divergence look, this trigger line shift, that higher pivot, and it's going to allow you to identify where change is happening on your 13-2. So 2 types of terminations. Price reaches an area. When the area is reached, if the trigger lines don't go through, no more short trades. Price reaches resistance. None of the trigger lines have gone through. It's a termination condition. No more long trades. Remember, 90% of what we do is waiting for that perfect setup. Smalls outside of the large, nothing in the way, and then all we have to do is pinpoint that entry. And you're going to be able to do that with amazing accuracy utilizing the 5-1 chart. In an uptrend, when all of your triggers are up, you have odds favorable momentum. There's absolutely nothing in the way. This is going to be look on the 5-1. You've made the decision to look for an entry because rules 1 and 2 are met. Focus your attention on these 5-1 large triggers. They should be up, they should be strong, they should be angled in the direction of the trend. Ideally, they will be trending one on top of the other, the large and the synthetic. And you're just going to look for areas. What areas are present near those large triggers? Well, areas can be a mid-band, they can be fibs, or they can be 1-to-1s. This is the first step. We're not taking a trade yet because our rules say that we're going to buy a pullback. And we're going to use a limit order to buy that pullback at an area inside of favorable large triggers. So this is the patience piece. We're going to wait. We're going to sit on our hands and wait for that reversal bar on the 5-1. Wait for that down bar after all of those up bars. When we get this down bar, it's time to create the window of opportunity. For a long trade, it goes from the highest point of support to the lowest point of support, right there at those large triggers. This is the area where the market is likely to continue. This is your best of the best spot for entry. Because of the momentum on the 13-2, remember, our 13-2 chart, our trigger lines are strong. There's nothing in the way. We have a freight train and a clear path. We're going to activate our limit order at the top of that window of opportunity. We're going to activate the limit order and we're going to wait for something to happen. And one of 2 things are going to happen. The market's either going to continue off without us. We don't control the market. All we do is we control the advantages present in our trades. Or we're going to get that retracement, that small pullback. It's going to hit our limit order right there at 79.21, and we're going to be in a long trade. When we enter this trade at 79.21, my initial stop's going to be 12 to 14 ticks. I'm going to place it below that window of opportunity, below those 1-to-1s inside of large triggers. Because this is your highest probability trend trade entry. The advantage of momentum, nothing in the way, and entering where the market is likely to continue. And I'll take this trade 1,000 out of 1,000 times. And I say that every day because 70 to 80% of the time, this is my result. profit target reached. Once this begins to move in the direction of the trade, I can reduce my risk because I waited for the pullback to the best of the best area. I've increased my profit potential. So we've gone through this pretty quick, right? 3 rules. The advantage of momentum through strong triggers. The advantage of a clear path with no termination conditions present. And the advantage of entering the market where it's likely to continue through using a limit order to buy or sell a pullback inside of favorable large triggers. So once again, I'm going to ask, guys, can you give me a why in the room if you're with me? 3 rules, 3 advantages, and we're going to put them all together right now. And then once we're done with this one, guys, new users, this is your invitation to learn how to identify that absolute best of the best area, to identify that high probability trend trade. I've got 45 people in the room. I know that I have demos. I know that I have a lot of experienced people too. So I want you guys to take a look at this one. The first thing that I notice on my 13.2, and guys, this is a historical study. This has already happened, but we're going to figure this out together. We've had a termination condition at the bottom. Small triggers, large triggers remained above these 1-to-1s. This is a beautiful termination condition that creates a full reversal, meaning that this is what we call a strong bottom. This is a market that's reached an area. The area hasn't broken. Everything is reversed and momentum's in our favor. So guys, the first thing I look for on the 13.2, do I have odds favorable momentum? Give me a Y in the room. If I'm clear to look for rule number 2, I should have small above the large. The large should be wide. They should be angled in the direction of the trend. Hey, Heron, if you don't have video, I haven't reached capacity. You can try rebooting the room, clicking on my name, Mark Novak Education, and that should help you out and get you in. Andrew, thank you. Joel F. says that we have odds favorable momentum. Joel, I'm inclined to agree. Small above the large, larger wide. You have done that. Then the next step is, Andrew, here is, there you go. And Gary said click on the education room, then click watch now. I think that's what. So rather than the reboot, click on the education room and click on watch now and see if that gets you in. Gary had the same problem this morning. That's what fixed it for him. Let me know if that works for you. If not, there is a live stream of what we're doing happening right now. I just put the link for you so you can actually watch this. And then if you have questions, you can pop them right into the chat room here. So we're all about solutions. Let's take a high probability trend trade together, guys, historically, and then let's get to the live markets, take a look at your charts, and see what's going on. And Heron, if, Andrew, sorry, I always go through code names. If you find yourself still stuck with challenges, go to Discord. Come down to the bottom, and Jason's link is right here in tech support. That guy can fix anything. That's always my first go-to when things don't seem to be doing what I need to be doing. So guys, odds favorable momentum on the 13.2. Yes, everybody sees it. Do we even need a 5-1 yet? Can't we just have a 13.2 open? Have we reached an area just yet at 39.25, guys? Has price reached an area that the trigger lines haven't broken? Do we have the advantage of a clear path? You've already identified. Joel says yes, we do have strong triggers. No termination conditions, guys. I know that nobody wants to play along, right? What if you get the answer wrong? New users, if you want to be a day trader, financial independence, all that great stuff that goes with it, if you're learning the software, I'm going to encourage you. Give me some of those whys. Give me some answers. Give me the wrong answers so that we can talk about it. With rules 1 and 2 met, guys, I'm looking at my 5-1. Everything says up. Every trigger line is up. Everything says this market's likely to continue. And in order to identify my window of opportunity, I'm waiting for a reversal bar. I'm waiting for a down bar. And there it is. So I'm going to do two things. I'm going to identify from the bottom to the top of my large triggers. And then I'm going to identify my highest point of support to my lowest point of support, guys. And this is my window of opportunity. Reversal bar has happened. I've identified strong large triggers. And I've identified where the market's likely to continue. And it's either going to be from this mid band to these 1-to-1s. And this is what we're looking for. And I'm probably going to activate my limit order just at the top, right around 39.88. And the market comes down, and I'm in a trade. Market pulls back perfectly. The bottom of my window of opportunity was those 1-to-1s, so my stop is below that window, about 12 to 14 ticks. And you can see that it pulls right down to those 1-to-1s and then gives me the reversal bar in the direction of my trend. I've reduced my risk, and if I'm in at 88, guys, I'm looking at maybe a 1.5 of risk right now. And I'm going to use my 13.2 to identify where the market is likely to go. 39.96 is that next key Fibonacci area. 39.95 is that divergence high. And then my job is to trust the chart and trust the triggers and utilize this highest probability trend trade to get me to that next key area. And that's exactly what it looks like on a 13-2, 5-1 combination. So what we've done is we've identified momentum, we've identified nothing in the way, and we were able to pinpoint exactly where that market is likely to continue. Give me a Y in the room if you're with me. I know you don't want to give me the answers on the questions, but let me know if you're with me, new users. Identifying momentum, no termination conditions. Guys, this is 100% what we look for in a high probability trend trade. Awesome. Thank you. I'm going to take this picture, guys. I'm going to take this picture every time it presents itself. I want to make sure that I have it so I can come back and study it each and every day. Now let's go to the live market. There's that momentum style trade. The ES just opened, guys. We'll see what happens with it. But let's go back and take a look. Here's crude oil. Looking for that odds favorable momentum. I don't think we saw a lot of opportunities in crude this morning. So we're going to watch an awful lot of live markets today. But you can see once again, termination condition has created a full reversal. A full reversal is beginning to give us odds favorable momentum. If you're a momentum style trader, you may have taken the first opportunity. We're just waiting for everything to line up for that absolute best of the best, guys. Let's start looking at some pictures. Been a lot of action today. Here's one from 8:02 a.m. John Novak posted his picture-perfect entry of the trade that we just traded together. This is only a 5-1 entry. Small triggers are outside of the large triggers. No divergence. Tiny window of opportunity. Guys, this is the absolute best of the best. Joel, let's see what you did today. Coming through, Joel, you took smalls above the large are wide, they're angled in the direction of the trend. You're taking a trend trade. Let's see what the writing says. Got to learn to read the charts. You didn't have the favorable triggers on the 21.3. Looking for that higher time frame. You had a termination on the 13.2, and triggers were favorable. So guys, every time you post a chart, this is exactly what we're going to run through. If you write your rules on the chart, we can hold you accountable for your rules. Price has reached this area of resistance. Absolutely none of the trigger lines have broken through. Guys, this is a textbook termination condition, an area that may reverse the market. You'll also notice that we have 3 divergences on the 5-1. A lot of indications that this is probably not going to make it up, that things are changing, that we've reached an area likely to stop the market, and sure enough, that market continues down. Small loss on the trade, but a little bit of chart reading goes a long way on that one. Joel, it's a great picture. And then as we come over here, everything is through the area, so we do have a clear path. There's a lot of momentum in a trending market, but it's not quite there. We have a pullback to the area of support inside of favorable large triggers, stop where the market shouldn't go, and Joel, great holding for the next area. That clear path pays dividends, so nice job on those. Jonathan, odds favorable, nothing in the way. Entries a couple ticks above the top of that window. And Jonathan, I know that John Novak told you about the swap we did on the 13.2 triggers coming in. But I think what's important to recognize here is this is your window of opportunity from those 1-to-1s all the way down, or from the mid-band all the way down to the 1-to-1s. And you'll notice that if you're going to take this trade from the top of the window, which is absolutely okay, your stop needs to go where the market shouldn't. And that's, you got out right about where that market continued on. Bottom of the window of opportunity, and then it made its way all the way up to the top. So I think it's a great trade. It's a great read. You had momentum, everything in your favor. Just a little bit of stop placement, putting that stop where the market is not likely to go. And then there's that trade in its entirety. Odds favorable. Guys, this is how you're going to go back, and this is how you're going to study. Odds favorable, nothing in the way. Pull back to the area, and then John's added a third chart here. John's added an 8-range chart. And look at the strength all the way across the board. Odds favorable, odds favorable, odds favorable. Everything lines up. Every background is green. Every trigger is up strong. Guys, the only thing that you have to do when your charts look like this is identify that area where it's likely to continue, load that limit order, and never miss this trade, because this is your absolute best of the best. Carl took the exact same trade, stop where it shouldn't go, profits on the way up. I see that you moved your stop behind price action and it came and got you, then finished the move. See that every now and then. Nice trade, Carl. Let me scroll down real quick. I know that I have some comments at the bottom. Just want to make sure. Jonathan, you're very welcome. You guys, remember, this is what we're going to do each and every day. We're going to watch the live market. We're going to wait for rules to be met. And when those rules are met, take a trade, take a picture. Show me what you're doing, why you're doing it, and we'll talk about it each and every day. Whoops, I clicked on the wrong link. Hold on just one second. Bob72, are you in the classroom today? I was thinking about you this morning, Bob. So I opened up my natural gas just to see if there were any opportunities. Termination condition. right here on the 13.2. This is what we call a momentum style trade. So Bob, maybe you can compare this with your natural gas trading. We knew where the market was likely to stop. We identified through divergences that termination condition was going to be a good one. Waited for a full reversal bar from the 13.2 and then sold that little stab back right to the mid band. And this one went from 35.10 all the way to 34.55-ish before it ever even hit the brakes. Pretty easy rules-based momentum trade. Wanted to share that with the class because I think it's important to remember that in the beginning we're going to talk about high probability trend trades, right guys? We're going to look for the absolute best of the best. But that's not the only trade that we have in Nexgen. That's not the only trade that we'll teach, that we'll discuss. We'll look at each and every opportunity that's there, and we're going to try and point them out. Gary, recognizing, had a great termination condition, and he's looking at his 5-1. Identifying the fight on the chart at these key Fibonacci areas. Guys, this is chart reading 100%. You're welcome, Bob. I love this look. If we can identify through chart reading where the market is likely to go, and then wait for that area to clear, right? Wait for a clear path. Guys, 0 trigger lines have made it through resistance, and 0 trigger lines are through support. That market's winding up, it's consolidating. There's no clear path up or down. Next-gen users, you have the advantage of recognizing when this is happening, keeping yourself safe because we're rules-based traders. What we see at these key Fibonacci areas is a fight. The buyers, the sellers. The buyers fight back, the sellers come again. The buyers, the sellers. And if you look at this, guys, it looks like a seismograph. This is the struggle happening between buyers and sellers. Next-gen users, you don't have to get caught up in that. You can identify with very clear rules. If my path isn't clear, I'm not going to look for that trade. And a little bit of patience here keeps you out of that ugliness. So Gary, that's some awesome chart reading going on right there. Great patience, waiting for the breakout, waiting for the advantages. Oh, I have the best wife ever. She just brought me breakfast. It'll be there at the first break. All right, guys, let's see what else we have going on here. Another one of those momentum style trades. This one's on crude oil. Coming off resistance when everything begins to roll. Once again, guys, every trigger is down. The charts are red. Everything says the sellers are in control. There's that momentum style trade. And it takes you with odds favorable momentum all the way down to these 1-to-1s. 90% of what we do is going to be waiting, reading charts, making sure that we have the advantages, and then once those advantages present themselves, guys, we're going to pounce. And that's exactly what we do. Paul, not a great top, right? Divergence, divergence, full bar, no divergence. There's that momentum coming down. Paul, I've got to note, though, it's that termination condition coming from the area that adds strength to this trade. Notice how all of your trigger lines are still above that area of resistance. And you waited for the more patient approach without a doubt because you weren't sure where it was going to go. Great profits right at the mid-band. Making a conscious choice through chart reading. I'm giving up the perfect top, but I have enough advantages to take this trade. As you grow with the chart reading, that's exactly how your world comes together with the software. There's this clarity that comes about. It makes it easier. All right, Bobby T. I love this. Using a checklist. Does he have odds favorable momentum on the 13.2? He says without a doubt. No termination conditions. He hasn't reached that area of support. Area for entry inside of favorable large triggers. Not quite, but it's close. It's more momentum style, but that's a great look. It's the same one Paul just caught. using a checklist, catching that trade all the way down. And on that last one, Bobby T, momentum says you got a good shot at hitting that 85 area. But of course, it looks like you took profits at this larger chart mid-band. Great trade, beautiful execution. And I love that you're using the checklist. Guys, if you haven't used the checklist before, let me close out of this so I can share it with you. The exact same checklist that Bobby T was using. This is a high probability trend trade checklist. This is a checklist just to help you police yourself. This version that I just uploaded into the room, guys, this is the most basic, highest probability, everything in your favor checklist. If you're a brand new user, let me upload this one into the room as well. I'm also going to give you the highest probability trend trade checklist, but I'm going to give it to you in a different form because education is key and understanding is key. The second version that I just uploaded is not only the checklist, but it's also a picture of what each item on the checklist means, guys. Your job as a brand new trader is to print out this checklist. Print out the basic one, right? Where'd it go? Print out that basic checklist, put it on your desktop, keep it in front of you. Make sure that every time you're taking a trade for that first 30 days, you're really following rules. You're giving yourself the best of the best. I haven't had anybody in the history of this checklist follow it to the letter for the course of a week and not be around 80 or 90% winners. I'm not guaranteeing that you will, but I am telling you that when people put it in and they're really adamant about sticking to the plan, they're good. Guys, we have smalls above the large. We have large breaking through an area. 96 and change has the potential to break, but it hasn't broken yet. The strength on my 8 range chart, everything says up. Some of you probably got in at 95 and a quarter already. Some of you are going to an 8 range chart and saying, let me just verify that the momentum supports it. It sure enough did. And there's your medium probability trade right there. Odds favorable, smalls breaking through, smalls outside of the large, tiny window of opportunity. Wonderful opportunity to get up there. It's 50-50 for sure, Gary. More advantages than disadvantages, and the market goes right up to that area of resistance. We can identify it as an area where the market is likely to stop, maybe use it as a profit point. Tighten up stops as you get into it. Let's see where we're at. Same look. There's one of those momentum trades on the ES. Paul, that's the exact same one you took. John Novak's got a camera in your room. Be careful. He's taking the same trades you are. Jonathan, look at all that momentum screaming down. Pull back to the area of resistance inside of favorable, or just below favorable. I hope that one worked out well for you. We are trading into a mid-band from a bad top. Sometimes that management gets you in. You can make $100, make $150, and then that smaller chart has you manage out. And there it is. Paul takes the same trade. On his 13-2 trade. Hey, Andrew Heron, did you get in and get visual? I wanted to ask that. I just came to your comment in there. Guys, this is a pivot that's not coming from an area, right? This is a pivot that doesn't have the advantage of starting from a Fibonacci-based indicator. So that mid-band becomes your first target area. And when that mid-band is reached and those large triggers don't follow along, Paul points it out here, full bar away, price loves to snap right back to those large triggers. Both of you guys, great chart reading, great trades. Good job recognizing that distance back to the large triggers, Paul. Keeping you out of harm's way. And sure enough, it pulled right back to it, didn't it? Second lower divergence. And then we get a third lower divergence. And Paul, you're calling it a good bottom as we come up. multiple divergences. You're trying that momentum style. I think you got a little excited, Paul, because we have divergence coming directly from resistance. Remember, if it's a momentum style trade, we lost momentum with divergence. Did you reach out to Jason, Andrew? I'm going to see if I can get you some help real quick. Awesome. Jason's a great tool, guys. I know you think, oh, I don't want to bug tech with this. I'm telling you, he'll send me hate mail later, but I don't mind. Guys, Jason is on board, and his whole goal in life is to help you out, right? And he may be able to recognize something simple, Andrew, that I can't see from where I'm sitting, and that may help you out a lot. So I want you in. I want you seeing the lessons, watching those. Paul, did you recognize? Right into resistance, right? Boom. Loss of momentum. So it can't be a momentum style trade. But you were bored. Man, bored costs me money all the time. Let's see where we're at in here, guys. Great job posting pictures, keeping me busy. I absolutely love it. Gary, let's see what you did. Gary recognizing those terminations. Says bias is up, but waiting for it to clear. Gary, great patience today. Waiting for your rules to be met. John says trend trade long into fibs on the small chart. Large chart looks pretty good. Small's above the large on his 8 range. That tends to be a tiebreaker for a lot of people. George T, good to see you posting in here. Let's see what we're looking for. Reach that termination condition. You get a full bar. Going for that momentum style right at the area. It ends up not going. Pulls all the way back to that HVA line. And then on your 13.2, large never made it. There's a 5-1 entry, and then divergence allows you to manage out of it. George, I think this is a great trade. Momentum coming from a great bottom. Everything says up. No divergence. Picture perfect entry. And this gives you the opportunity for a little over 2 points. And then that divergence on that 50-50, you manage out beautifully. Nice job, George T. Great heads up trading. John using the momentum. Perfect entry. Takes half off at the trouble spot. Puts himself in a no-lose position. Nice trading, John Novak. Guys, you are killing it today. Jonathan, beautiful. Everything says up. I mean, this may be the entry of the season, right? Look at that tiny little window of opportunity. Picture perfect. Jonathan, great stop placement. And profits all the way up. That's a solid trade. Nicely done. And then once again, John Novak's putting cameras on you guys. Nice trade, John. Great, tons of advantages. Everything says giddy up, and it giddy up. Just incredible. Green background, weak bottom, buying on the loot on the fib. Let's see what you're doing here. 13.2 says down with strength. Your 5-1 said down with strength. Tried to go shorts and it didn't work out, so you reversed your position. Accidentally sold it. Whoops, I've done that. Whoops, so let me bring that one back up. A lot of strength against this trade. And you're looking to buy that snapback to the large triggers which stayed above you. Little aggressive, very counter trend. At the time of entry, Justin, not so much. So at the time of entry, this market is absolutely screaming against you. Do you see it? Small's below the large are wide. Oh, that's the 21.3. I got you. I'm with you now. You waited for the pullback. Give me just 1 second, guys. Need to respond to John Novak real fast. Apparently my YouTube stopped. I'm going to try and resume it. I may have to build another one real quick. Give me just 1 second, guys. Sorry, technical difficulties. I will be right back with you. Sorry, Justin, I was looking at the wrong chart. I was looking at your 21 and it was giving me heartburn, but I love what you did on the 13.2. Termination, let everything roll. Nice trade. My apologies. Guys, sometimes I'm going to look at your stuff and I'm not going to see exactly what I need to see. I'm going to mute real quick. I'm going to try and fix this OBS. 1 second.